Hello my friend, thanks for coming and check this video. In today's video we're gonna going for the some most usable chart pattern that is most important part in the trading to identify the chart pattern. If you identify the chart pattern correctly and they get a position on time, you're gonna be really successful in the trading. If they add a value to you, please smash the like button, and that's the only way that you can support me. And on the today video, we're gonna go for the basic one. On the future video, I'm gonna break through each of them and describe it for you in advance, how to use them. And before we waste the time, let's get started. First one is double top. Double top is happen a lot in the market. And we have on the double top, we have one major resistance on the top. That is market couldn't pass it through this area. And because a lot of seller waiting for the open the position on that area, and a lot of sell the position under this area, and the market couldn't pass it through this area. We have one neckline on the bottom of that one. That is sort of the big support for us. And when the market couldn't pass it through this area, market normally break through this area. Not normally, is sometimes break through this area. If we get enough liquidity in the bottom level and they're going up. That is basic thing about the market behavior. If you understand that this one, you're gonna get a good risk to reward ratio. Market, when they break through the neckline, is sort of the lose the one support for it. And that this area is really important because when they break through this resistance and the neckline, normally on the lower time frame, we have one pullback to this area again, to the neckline again. And most of the time, most of the trader waiting for the open the position below this area, below the neckline. It's really important for us to understand the market has a lot of noise, and the pullback to the neckline and give us the confirmation of the trend change is good area for the open the sell position. Double bottom is a pattern of the indicator of the period of the selling, cause the price to drop below the level of the support, and seller couldn't push the price lower than that. Market sign of the bullish is happen when they break through the neckline. Normally we have one pullback, especially on the lower time frame. We have one pullback before the double bottom is been active. A lot of traders waiting for the pullback and open the position after get a sign of the bullish, after get a pullback to this area and open the long position under this trade. Identify the double bottom is could be have a really big risk to reward ratio. One more tip that is gonna be help us to find the double bottom. Double bottom is happen on the major support area. If you identify the major support area, you can use this pattern for your trading. Head and shoulder is chart pattern is which a large peak of the has a slightly smaller peak on the either side of it. The second one that is on the right hand side, market couldn't push the price more than the head of the head and shoulder, the last high. And that this is sign of the bearish because market couldn't make a higher high on this situation as much as we make a higher high, and that is sign of the bearish because market couldn't make a higher high, and potentially because this is pretty much is the last high before the head. That is sign of the bearish because we have a lot of seller waiting for the seller on the last high. And the neckline is being really important. If they break through the neckline, the head and shoulder pattern is being active. Otherwise, it doesn't called as a head and shoulder pattern. Normally, when the head and shoulder is break through the head and shoulder, we have a one pullback to the neckline again, and we start to going down. Head and shoulder, very important to identify it, and unless they not break through the neckline, it doesn't call as a head and shoulder. We're not gonna be getting active on the head and shoulder pattern. A lot of trader waiting for the pullback for they get a confirmation because market has a lot of noise, and this is noise is could be filtered by the pullback and waiting for the confirmation to open the short position under this pattern. Inverted head and shoulder pattern is pretty much same as head and shoulder, but is completely opposite. It happens when the market make a lower low, and on the like a right hand side on the right shoulder, we have a lot of buyer waiting for the market before they reach to the lower low, buy it before that. That is called as a head and shoulder pattern. The head and shoulder pattern is not active unless they break through the neckline. Neckline is really important on the head and shoulder pattern. And normally a lot of traders waiting for the pullback on the lower time frame before open the long position. Rounding bottom is sign of the bullish. This pattern is happen when the market is on the really key area of the support, and we have a lot of high volume under this area, and the seller couldn't push the price lower than that, and this is happen under this area. Rounded bottom is being active when exactly make a break through the this range and make a higher high under this area. That is really important to understand this area and the market of the sentiment of the market to identify this trend. Double top, round top is exactly sign of the bearish, exactly opposite sign. For this one, opposite after this one, market reached to the very big area of the resistance, and this area of the resistance market could push the price down. We need to, for the identify the round bottom, you need to find the area and the very key level. Normally it happen on the weekly and monthly big resistance area. The next chart pattern, we're gonna go and dig into it. We have a cup and handle. Cup and handle, it's really important because it's pretty much same as round bottom, but we have a one correction, and after getting break through this correction, we get in the sign of the bullish. The next target after breakthrough the wedge is sign of the, it could be going up to the next area of this resistance, or it could be going up. Target normally is been same as the cup size. We have it like a same for the bearish as well, is an inverted cup and handle. Is exactly happen on the big resistance area. Rising wedges is really important as well because it's happened a lot in the chart. And as you can see here on the, we have a one resistance and we have a one support as well. The market make a lower low, but is getting close to each other. The resistance that is on the top and the support is getting close to each other. That is sign of the bullish, because as much as the market going high, resistance is going down too. And this is sign of the bullish. And when they break through the resistance, that is sign of the bullish. Normally has a one pullback on the lower time frame as well. The falling wedges is exactly opposite of the rising wedges. This is sign of the bearish, because market, as long as resistance is going down, market couldn't keep up with the support and they lose their power. That is sign of the bearish. We not open the position unless break through the big support that we make it on the chart, and normally we have a one pull back to this area as well. A lot of trader put a market sell below this support, and most of the time is happen when the like a market significantly push down. Both rising and falling wedge are reversal pattern, with rising wedge representing the bearish market and falling wedge being more typical of the bullish market. Before we're going for the next chart pattern, if they add a value to you, please smash the like button and the subscribe. On the future video, I'm gonna break through all of them individual on the one video, and they show you what we're gonna get and what's the details we're gonna be mention about it, because this is the basic one. I'm introducing the basic first, then we're gonna go in for the break through the all of them, and they show you what we have in the chart, how to identify them in advance, and they use it as a professional way. Let's go for the next one. Peanut pattern or flag is really important as well. It's happened a lot in the chart. Normally peanut or flag is happen as a correction. If you identify them on the good way, we can get a really good risk to reward ratio on the chart. And peanut or flag have a very, in the future, I have a really advanced on the how to identify them, what's the rule for them. I just want to show you what's just only peanut is, and what's the pattern of the peanut and flag is. On the future video, I'm gonna show you in advance how to use it, because the pattern flag or create after is period of the we have a one upward or downward, we have a one correction for it, and identify the correction is really important, because as much as you miss the first movement, you can get into the trade on the second move of the trade. Ascending triangle is one of the bullish sign of the is happen on the chart. As much as we have a one higher high, right? The market couldn't pass it through the like a one big resistance. Our support is being increased. That is sign of the bullish. As you can see here on the chart, we make a lower high. As much as we get into the stock to pass it through the one resistance. As much as the break through this resistance, market is significantly going up. The resistance is normally happen on the big resistance area, the area of the really important on the chart. That is sign of the bullish is happen. We not open the position unless we break through this resistance area. Normally on the lower time frame, we have a pullback to the resistance area that is become our support. Decreasing triangle is opposite of the increasing triangle. And this is sign of the bearish, because market make a lower low and the seller is really strong on the market, and the market couldn't make a higher high. We still keep the holding the support area, and as long as we lose the support area, the market going to the downtrend. This is support, is major support for us, and you need to be care about the key area of the support and resistance on the higher time frame. The symmetrical triangle can be bullish or bearish, depend on the market. In either case, in normally continuation pattern, which mean market will usually continue with the same direction, but in the overall trend is need to be formed and break through the one of the lower high line and the higher low line that we make it on the chart. We need to wait for the break through the one of them. As long as break through the one side, we can going for the open the line or short position on the market. However, is no clear trend before the triangle is being formed. Thank you so much for watching at the end. I hope that it added value to you. If it added value to you, please smash the like button and the subscribe. And if you have any question, just leave it in the comment for me. I have a Discord channel. I just trade the crypto and the gold. If you want to level up your trading, just join my Discord channel for free. It's completely free. And we're gonna going for the in the future. I'm gonna introduce the more chart pattern for you, but the basic one is like that, right? If you learn those one and identify those one, you're gonna going for the more than 80-90% of your way. And those one is not happen a lot, and should be, I'm gonna introduce them in the advance, but it's not happen a lot. On the future video, we're gonna talking about the breakthrough in each of them, and I'm gonna show you how to use them in advance and how to make your own strategy with those one. Thank you so much to watch it at the end, and see you next time, guys.